The reason why I've got lower growth rates pretty much everywhere. I said Sydney's going backwards, Melbourne is backwards and it's going to stay backwards. Brisbane's going to have lower growth rates.
Price growth is still really, really strong. It's come down a little bit, but we're talking like 1.4% per month, which is like flying.
It's flying, but it's been flying for so long and it has flown. Now it's kind of starting to come down and the pilot has said, get ready for landing. Where should I buy part 2? In this episode, we're going to go through Adelaide, we're going to go through Perth, and we're going to go through Darwin. We're going to unpack exactly what the data is showing in each of these states and see whether it makes sense to invest there. We've skipped one other city as well. We're going to go through Hobart too. We're going to go through 4 cities and work out exactly where you should buy and where each sits on the property clock. I mentioned it in the last episode, in part 1, where we talk through the whole state gambit, look at the data and see how it's changing. We're doing this on a regular basis. Every 6 to 12 months, we do these sort of episodes to see where they're at, see where the economic change is, and to help you make informed decisions about where to look. We're looking at macro data to help you work out what is going on in each of these capital cities right now and what may happen over the next 6 to 12 months and where they sit on our own little Confin property clock and why. Kurt, how are you, man?
Pretty good. Do you want to start with the exciting ones or the not exciting ones?
Oh, I want to be respectful to everyone across the country. I've looked at our podcast stats and people listen in from everywhere. So let's start with the every exciting one, which is all of them. And let's start with Adelaide.
Adelaide. All right.
Let's go with Adelaide.
All right. You did choose one of the exciting ones to start.
Is that exciting? Okay,
yeah,
cool.
Yeah.
That's good to know.
So, I can give you some quick numbers and we can talk about a bit of an overview, but basically
let's start with the high level.
High level?
High level first. Before
right.
we delve into why and the numbers, give people the juicy bit, the bit that they want to hear, the soundbite.
Yeah. I know they build like submarines, but it's flying.
Flying.
They should be building planes. They are flying.
Yeah, I like it. The reason why Adelaide is flying is because it's got a, early 4% unemployment rate. And Adelaide, every time I look at these things, I like to compare how each state is doing relative to itself. 4% in Adelaide is different to 4% in Sydney. 4% in Adelaide suggests that, hey, there's a lot of employment happening there versus its typical historical 10-year average. Well, in Sydney, we typically have a strong, healthy, vibrant economy, and that's why people come to Sydney. And it's typically in and around there, or 4 to 5%. That's the benchmark that you apply for Sydney. So Adelaide's economy is doing really, really well. And it looks like it's going to continue to do well. So I think over the next 6 months, between now and the next time we do this, Adelaide will do fairly well. It's probably, past the middle of the boom, tail end of its boom. A bit like Brisbane. Brisbane, nothing where you hit sell just yet, but you'll look at being like, maybe I will consider selling if I bought there long enough ago. If I bought there 3 years ago, maybe you do look at selling. But you have another 10% at least kicking in. Maybe 20, maybe even 30% in price growth over the next few years. You have that sort of baked in, I think, from the level of prices that are at the moment and the data and what it's saying. So past the middle of the boom is where I'd call it. 1 o'clock too.
Yeah. I think there's less, the leading indicators are a little more positive than Brisbane. So I think it being slightly closer to the middle of the boom than Brisbane is probably right. So price growth is still really, really strong. It's come down a little bit, but we're talking like 1.4% per month, which is like flying. Was previously 1.8. Asking prices are still up, so up 2%. Rents are still going up. The only thing is vacancies are up a little bit, but they're at 0.7. So they're up a bit, but they're still very, very low.
Yeah, very tight.
So I think that population is up as well. So the state's growing by 1.7%. Like you say, unemployment 4.2%, so higher than other states, but historically for South Australia, relatively like good low unemployment numbers relative to themselves. And the state's growing as well, not by that much, 0.2, but economic output is positive basically. So to me, the combination of indicators here is like pretty strong.
Yeah, that's a fair summary of it and also explains why prices will continue to rise. The reason why I've got Brisbane and Adelaide a little bit different, like I'd call it 30 minutes different on a property clock, whatever I said Brisbane was. And is affordability. So Adelaide is getting more expensive now. It's a lot more expensive, but it's still a bit cheaper than Brisbane. I'll just take a quick look at the chart that we have on our little research piece here and confirm that's the case. So yes, it is still cheaper, and that lower price point makes it more attractive. So it will continue to do well over the next 6 months, and its economy is doing really well. I want to provide some crystallized numbers to where I think price growth will be. I think it'll be between 0.5 and 0.8% between now and 6 months. So it's running, the pace of price growth will more than half.
Okay.
Over the next 6 months as well. Yeah, I don't know whether that's a good characterization of it, which suggests that it's flying, but it's been flying for so long and it has flown. Now it's kind of starting to come down, and the pilot has said, get ready for landing.
Okay.
That's kind of where we're at the moment. And, we're 30 minutes from landing, basically.
Yeah. All right. Interesting. I think there's not the weakness in the numbers, I think, to suggest that quite yet, but your reading of the winds might be that a little bit similar to Brisbane in that sense, that the juice for its continued kind of growth at its current rate isn't really there, and that's going to tail off over the next 6 months.
Yep. I think that would be a summary. This all circles back down to the beginning of our initial podcast. The reason why I've got lower growth rates pretty much everywhere, I said Sydney's going backwards, Melbourne is backwards and it's going to stay backwards, Brisbane's going to have lower growth rates, Adelaide's going to have lower growth rates. We'll talk about Perth separately, but the reason why I've got all of these coming down a little bit is because of the macro setting. It's because of the first level topic point. Consumer confidence really low, inflation's still too high, high
economic
interest
growth
rates,
is really weak,
coming down, real living wages, blah, blah, blah. All of it's just ugly. We're in an ugly setting. Prices shouldn't be rising to 15, 20% per annum in every capital every year for 3 years running when it's already happened, when you have this economic narrative now. The economic narrative has got worse, and hence price growth levels over the period ahead through this high rate cycle will come down. That's the reason, the underlying reason why I've got all of these coming down a bit. It's just general capital growth rates for property coming down.
All right. I think that covers off a bit of a summary of Adelaide.
Yes.
Do you want to do Lucky Dip again? Who do you want to tackle
Hobart.
second?
Let's go to Hobart.
All right. Hobart.
Yeah. Got to keep people listening. You don't want to just go straight to WA. Everyone's like,
No, I thought everyone wants to hear about Darwin.
Yes. Let's do Hobart first.
Okay. Hobart. So do you want to give a bit of a high-level overview? It's probably not that pretty. And then...
You do the high level.
Okay.
I love hearing these stats. Plus, you change my mind every time you tell me these stats. So I'll make up where it sits. We'll do Hobart's property clock at the end of this statistical analysis.
Okay. Yes, I would. Yeah, it might be in the trough kind of scenario because it's not very pretty. So prices going backwards. At a relatively not that quick, like 0.1%. Asking prices haven't changed though. In houses, unit asking prices are falling pretty significantly, like 6.7% drop. Rents are also falling. The only kind of positive strong point is vacancies are down a little bit. So the vacancy rate has dropped to 1.2%, but essentially prices, rents, they're all tracking the wrong way for Hobart. They're all tracking down. Dwelling starts are down, but that's probably not that relevant for the immediate growth prospects. Population has slightly gone up. It's pretty flat, but 0.3, so a very marginal increase in population. Also, state economy pretty flat, 0.1 increase, but it's not really going backwards, I guess is the positive, but very flat. And then unemployment at 4.1%. So there's not a whole lot of positive stats, I would say, when I'm looking through this. I think it's going backwards at a little bit of a clip, and the leading indicators aren't necessarily showing that there's going to be an immediate turnaround in the next 3-6 months.
Yep, I agree with that. The reason why Hobart is not positive in its property cycle at the moment is all to do with the context of its past. I read every data set that you've just there. I'm going to say it all in the other end. Unemployment in Hobart is lower today than Sydney. That's true. Or New South Wales. Or close to the same.
Similar, yeah.
Very, very similar. We have a vacancy rate below 1.5%. We have rents having risen over the last few years. We have, the reason why I'm talking a little bit slowly is I'm looking at the data on my phone for those on YouTube as we look through this. These are all Hobart is flying type measures for Hobart. Like Hobart is a small capital city that has typically had a very laggard type economy for a 10, 15-year time period. Now it's got a 4% unemployment rate. People in Hobart should be living better economic conditions than they've typically been used to with a 4% unemployment rate when it's regularly starts with a 7 handle. Like the number of people unemployed is pretty low. But the reason why Hobart isn't going to do so well just yet is because it's on the back of a pretty mammoth Hobart-esque property boom. And its best piece of information here, the best thing to take from Hobart is not whether to invest in there or not, is to watch it. Is to be like, hey, what's happened here? This is the city. This is the capital that went boom. It went rocketing. And now it's not rocketing. It stopped completely and then started going backwards. What does its charts look like? Because it tells you where Adelaide, Perth, Brisbane may potentially go to in terms of its charts and its cycles, because it gives you that richness of the market cycles. That's what Hobart tells me. Hobart is just at a different point in its cycle. Its data isn't bad. Its underlying housing fundamentals are pretty good. Like, people aren't building homes. There's no homes available for rent. And the economy is doing very well in terms of jobs and incomes and livelihoods versus what it typically has. Those are pretty good fundamentals. Prices are just really high relative to incomes now there. And they've risen a lot in a short time period. So that is the richness of the Hobart information. In terms of where it's at, its property clock, I'd say it's near its bottom. Like, it's still at the bottom. It's near its bottom. I don't think I'm investing there. I don't think it's going to go through another property price boom. I think it's a bit different to Sydney and Melbourne. I don't know if I'm going to be like, Hobart, go time, because Hobart is all going to be based on whether its economy can not deteriorate so much in the next 10-year period. Over the next 3 to 5 year period, probably it's more unique. And I think it will deteriorate. I think the economy, the performance is too strong. I think it'll weaken. And that weakening should mean that the Hobart property market doesn't do amazingly. So it'll probably just sit around the bottom, or maybe just a little bit past its bottom, I would say. What do you call that? Like 9 p.m., 8 p.m.
No, 9 p.m.'s like coming into boom times.
Oh, is it? Okay.
Yeah.
7:30 at night. Like, not quite 6 o'clock at Melbourne. Like 7:30, 8 o'clock at night. It's prime time TV time, but it's not going to do anything for a little while yet. And the difference between Hobart and Melbourne is I think Melbourne's going to skip from 6 to 12 pretty quickly, fast. I'm not sure Hobart is going to go. I think it's going to just stop. The clock battery is going to run out.
Well, and like you say, the context of that is that it's had a bit of a run.
Exactly.
So where like Melbourne hasn't, if that makes sense.
Exactly.
So it's potentially got less. It needs more favourable conditions to have another kind of run than Melbourne. That's probably got a little bit more room to go.
Yes. It just moves a bit slower, probably like Hobart and why people live there. It just moves a little bit slower than Melbourne. It's going to stay at 8:30 for a period of time. I think it's going to be there for a little bit longer. And then when it seasons off for a little bit, then it may have a bit of a rise, but it will be based on its economy. And I think its economy, reading the winds, will move backwards pretty significantly over the next year or two. I don't know why. I just would read the winds that way. I am not a Hobart local. Don't know their state economy well enough, but that is what I would think.
All right, so that's Hobart. That was maybe, a bit of a negative spin done with or negative information with a bit of a more positive spin than I gave it. So good on you for that.
Yes, standard model.
Yeah. So
that's me.
Let's go Darwin then. Let's jump to the next one.
Darwin. You tell me a lot about Darwin. It's the only capital I haven't been to in this place. Darwin is going to be my next domestic holiday. I'm going to make, I should ask my wife that, but it's going to be on my 2025 agenda. I want to go to Darwin. I want to go to Alice Springs. I want to go see what it's like. I feel like I talk about it a lot and I know very little about it. So it's good for the podcast.
Yeah, there you go.
Podcast research.
Podcast research trip. I like it. So let's go into the data a little bit because it's, I would say, a little bit of a mixed bag. Maybe not a mixed bag, but on the upside for Darwin, like rents are up pretty significantly and vacancies are down. So in terms of the rental market, that's the big shining light to go, okay, there's upward pressure on rents and like lower pressure on vacancies. The other numbers for Darwin aren't that pretty in terms of like economic performance is going backwards at a pretty big clip. There's prices are going backwards as well. Admittedly, not that fast, but like small price declines are happening. Not many dwellings being constructed. Unemployment's not too bad at 4.3%. Wow. So that's relatively solid, but
They had a big government change, right?
They did that in an election recently. Yeah.
They had a landslide swap.
Yeah.
People must be angry.
Yes. Well, I think without knowing the intricacies, the negative, it's got the worst state economic performance of anywhere, right? Yes. So it's going backwards the quickest in terms of economic performance, which to me is the big kind of red flag, I guess. There's some positive signs in the rental market, but I don't have enough on the ground intel that I would say
that could just be data.
Yeah, it could be data, and the red flag of the bad economic performance is kind of like, to me, a bigger red flag than the green light with rents going up.
Yep. I would say that's a good summary. I don't know where to put Darwin on the property clock. I'm going to let you decide this. I've tapped out on this one, and I'm like, Curtis, you decide where it is.
All right. Hang on.
You're the Darwin expert. Have you been to Darwin?
I have not been to Darwin.
Damn it. We both need to go on this trip. Okay.
All right. Oh, that sounds like fun then.
Satellite office day. Maybe we do a podcast in Darwin one day.
Darwin podcast?
Yeah, let's do a Darwin podcast.
Right.
Show everyone that we've been there. We are committed.
We have some on-the-ground intel.
Yeah, we're committed to understanding property markets all across Australia.
Okay, let me have a look. What's Darwin done since COVID? So it's actually got 26-ish% growth since COVID. So it's not like Melbourne where it's done very, very little. So to me, I would be putting Darwin maybe a little bit similar to Sydney, like 3 o'clock, 4 o'clock, something like that, where I'm not seeing positive prospects for great growth. Just with the really, really bad state economic performance, that's a bit of a red flag for me. And it's not like it's been flat for 5 years and everyone's kind of like, when is Darwin going to boom? It has had some growth over the last few years. So yeah, that's kind of where I'd put it. You are welcome to have a dissenting time.
Yep. I'm going to take that and be like, Curtis, Darwin, Wiz, amazing insight there. Let's move on to, we didn't do ACT in the intro. Let's do ACT. Man, there's a lot of capitals out here.
I don't even know if I have my little ACT fact sheet here.
Do we have our little
I've got an ACT property.
Yes.
I probably don't track it close enough though.
Yeah. Let's give a little shout out to the ACT, our Canberran friends. We obviously have a lot of friends there. Any family? No? We have been there a lot. Curtis and I met in Canberra. The reason why I'm talking about the day we met on this podcast about property is because Curtis is doing research on Canberra very, very quickly as we speak.
No, I'm looking at I'm going to proxy my rent with asking rents for the state.
I like it. The data whiz here is doing live data.
If my rents are up, then ACT rents must be up.
ACT, I don't really know how it's doing specifically at the moment, but it hasn't been doing particularly well, especially from our Canberra clientele who've been telling us this, that prices haven't really moved all that much very recently. So what have we got here? Change in dwelling values in Canberra, moving backwards month to month, moving backwards for the quarter, and haven't done anything for the year. Its economy is really tied to the public service, and according to my understanding, is the public service is talking about public service cuts. We just had the Liberal government who, may not get into power next year. And if they do, we're talking about big slashes to public service numbers, which is not unfamiliar for changes in government in Canberra and not an unfamiliar policy. It happens pretty much every time a Liberal government gets into power. So there is some level of risk there in terms of where Canberra looks like over the next 12 months. So it's more of a political capital and what is happening in the public service and other capitals. But I don't think it's going to do all that much over the next 6 months either. So there's a little Canberra summary that I've just provided there.
I'd say rents are relatively flat. My rent hasn't changed recently, but has last 3-4 years, it's shot up a fair bit, but last 12 months definitely tailed off a little bit.
Yeah, housing finance, that's really poor in Canberra. So people aren't seeking loans there, which is one of the big telltale signs of
lead indicators,
for poor property price growth over the next little period. And dwelling starts are really high there at the moment, so people are building. So
supply is coming online.
Yeah. What do you call it? I think Canberra might have a little bit more room to move backwards, a little bit more. So call it 530.
5:30.
5:30. Oh, you look upset at me because
Yeah, do I sell?
Curtis,
I missed the time to sell. That was like last year.
I forgot.
Should
Curtis
have been
has
paying attention.
Canberra exposure and Victorian exposure, and I've given his 2 property investments 5:30 and 6 o'clock. So he's looking at me being like, "Read him, you kind of suck as a friend."
Too late now.
All right, so we've done Canberra, Darwin, Adelaide. Let's get into the state that everyone wants to talk about, the one that we get asked on, and the number one contract of sale location that we still see, Perth. Let's run into it. Perth investors, congratulations. You've absolutely shot the lights out over the last 12 months. Price up 25% already, maybe even 30%. It's in a mega boom territory when prices move. Prices are up a quarter of its property value in a year. Perth people are just wealthy. At the moment, over the last year, they've had a wealth boom. Their state coffers are on fire. Stamp duties are going to be on fire. Interstate investors everywhere flying. Housing construction is improving there, but vacancy rates is pushing back up there. I'm going to put Perth very much still. What did I say the other was? 130.
Yeah.
Perth is going to have double-digit price growth over the next 6 months. I'm sure of that. I'm pretty confident of that. It will still be in the double digits. While I said the others will come down, Perth will come down. Price growth is at its peak price growth rate. So price growth will come down, but it will come down from 25% to 12%, which is still really, really fast, even if I think price growth levels will materially fall and even half. It's got another year to run.
So it's probably, of all the capitals that we're talking through, it's the one that's the strongest.
Yes.
Yeah.
It currently is. It was in our last episode a year ago on this. It was, currently is.
But even like looking forward.
And it will be going forward. I think this time next year, maybe not the next one, the one after this on our property cycle one of the big headline points will be
Perth's over.
Perth's over.
Yeah.
So will I invest in Perth now though? That's a different question.
Well, yeah, because that's, there's already been so much growth, and it depends what type of investment you're looking for. If you're trying to be like you're buying basically before the boom cycle, which might push you more towards like Melbourne, and you're prepared to accept, 12 months of not much happening in order to catch the full wave, or if you're, still seeing that Perth is going to do well over the next 12 months and there's enough in it for you.
I probably wouldn't. I'd go further. Probably wouldn't. I think you'll do well in the next 12 months. I think you'll probably do well. It buffers you a little bit as well. If you buy a property and it's up 15%, it buffers you a little bit, being like, prices could fall 10% and I'm still ahead.
Yeah, kind of. But if you're looking maybe over a 5-year window and being like, hey, what's going to get me, that 70, 80, 90%, growth over a 5-year window, then maybe there's a bit of a question about Perth that, hey, even if it has another really strong 12 months, once it tails off, if it flattens out for a period of time, are other markets that aren't booming yet that might boom in the future, are they going to outrun it on a 5-year growth rate? That's probably the debate.
The reason why I'd say no to Perth is because I'd fear prices moving backwards.
Yeah.
In some of the other capitals, the volatility of price growth is a bit different. Sydney, fear. I've got fear. Prices can move backwards materially. 10% could fall. 15% it could fall. It's shown that in 2018. It showed a 10% decline in 2022. We're talking 2 years ago. These are mega falls in house prices. Like 10% isn't
material.
Nothing.
Yeah.
That is the Sydney housing big fall, or the nationwide big housing falls. It's driven typically by Sydney because of its weighting, and 10, 15% are really big falls historically. Perth has the same. So I think prices could fall at some point. And because prices could fall, even though I think prices will rise, even though I'm saying that it's going to shoot the lights out, it's going to be the number one performer, it's going to do really, really well. Whether I invest there today, bit more cautious of it because of its property cycle and how it could change over time, and how the lack of sensitivity to interest rates. That makes sense.
Yeah.
I think some of the other states, when interest rates fall, and I think that's going to happen.
That'll provide absorb some of the buffers.
Forward momentum. I'm not so sure about Perth and that. So in that sense, will I invest in Perth? Probably not. But it's going to shoot its lights out. The data's very strong. Vacancy rate's really low.
Yep.
Economy doing fairly well.
Asking prices are up. It's currently got a 2% growth rate.
Yep.
Population's growing pretty quickly. Unemployment's very low, like 3.7%. So it's, by the numbers, it's not really showing any signs that there's weakness right around the corner or a softening right around the corner. I think you're right. Like just the Australian economic conditions are softening. So that will apply to some extent. Like, ongoing 2% growth rates are probably not sustainable. But I would say of all the states, kind of the little matrix of factors we're looking at, Perth has the strongest combination of factors compared to even, Brisbane, Adelaide, other factors. Perth has kind of, the strongest matrix, I would say.
Yeah. Part of my reason for this is I'm looking at commodity prices. So the reason why it matters is when commodity prices double, for example, and iron ore prices, our biggest export, were more than double only 18 months ago. Obviously, that's a bit of a peak point. But when commodity prices are really, really high, Perth goes through an income bonanza. The state government gets royalties. Australia goes through an income bonanza. Perth and Western Australia specifically go through an income bonanza. And that income growth can support lifestyles. It can support the economy. Now, iron ore prices are weak and the global economy are suggesting that it is weakening, and it's fallen, 40% in 2024 alone. So there's some, I don't think it's a complete mining case situation only. It's just some of its major employers will start cutting workers. And you're probably already starting to see that. And you'll see an increased level of that because an iron ore price at $100 coming down to $80 versus $150 or $140, whatever it is normally, that means less income. That means the biggest companies are halving their revenue or having a 30% drop in their revenue. That's going to lead to changes in employment conditions there and change the economic dynamics around. It's going to push up vacancy rates. It's going to lead to the domino level. Maybe we'll do that on a different podcast. The domino of economic activity to every single property metric and how it flows through. But with this one in mind, I think Perth will do fairly well over time, but I don't think it's the place to invest because that worries me a little bit. And it's already up 62% since COVID, 25% in the last year. If you're buying today, you're not paying 25% more than last year. You're paying 35% more because the data is just catching up so quickly. All of that makes me say, probably not investing in Perth anymore, but it has done fairly, fairly well.
Yeah, and it might be the top performer over the next little window.
It is. One last little summary piece to all of this. So we talked about the narrative at the beginning for part one about what are the macro factors driving all of this behind it, and it filtered through into every single state conversation that we had. I think we almost talked about interest rates and some of the conditions that we have for the Australian economy into each individual state. But one additional thing that I want to add in is apartments in these areas, in many of these areas, will not get built. They will not be building apartments in Perth, in Adelaide, in Brisbane they might because prices are high. In Perth, in Adelaide, in Darwin, in Hobart, no one's going to be building any apartments. In these capitals, people want to live in apartments. So you have an opportunity brewing within the broader spectrum. If you're buying an existing apartment, demand will continue to rise over a period of time and no one's going to be building apartments for an extended period of time until these feasibilities catch up. As a result, it creates a potential opportunity in a certain segment of the marketplace, in these capitals specifically, because the price per square meter, you're buying apartments below cost. If you can buy apartments below cost, doing pretty well, below replacement costs. So that provides a little bit of an opportunity for people. You're getting kind of good deal there. So that is an arbitrage opportunity that does exist. So I think you're going to start seeing spread in apartment value prices
and houses,
dwelling value prices. I think apartments are going to outperform house price growth in these areas in the 2-3 year window ahead until supply levels and these feasibilities catch up. And that price growth in apartments is going to drive the next cycle of apartment construction at some point.
Yeah. All right. I think that covers most of it. We ran through it. So what's the high level summary? We think Perth, Brisbane, Adelaide are probably going to be the strongest performers, although your little tip is like, I'm not investing in any of them. We have to visit Darwin.
Yes.
Are there any other takeouts? Sydney and Melbourne probably going backwards over the immediate future. But Melbourne's prospects maybe
price
good
growth
going forward. Yeah.
Yep. That's the broad summary. And the property clock has changed a little bit in terms of where everything is at, a little bit further down, I would say. Everything's just moved a bit further along. And growth levels will probably be a little bit lower this year than it was in the last year, driven by those macro factors there. And I'll repeat it once again, for anyone who wants a deep dive and reading of the wins and economic change for each individual capital, where we go through data with charts, with a lot more information, jump on our YouTube channel, Australian Property Talk. We'll be releasing this every week over the month of September and October. We're going to be releasing a whole bunch of these data and information out, spending a lot of time producing this all. So if you're interested in any of that and want all of that info, jump on our YouTube channel and you can watch this episode there too.